We've got the numbers right now, Infi numbers 3440 on PAT. That's what we're seeing at the moment. And that's against a poll that we have of 3435. So it's broadly in line. The stock has dropped about 2.7%. That's the PAT number, 3440, that we're getting broadly in line. It's down, of course, as we expected. Approximately 3600, 3597 was the PAT number that came in the previous quarter. And Infi has now given us 3440. It's down 4.4%. It was expected to be down about 4.5%. That's the only number we have. All right. We also have 16,780. This is again a low number, 16,780 on sales. That's 1.4% up. This is exactly what has happened to TCS as well. 16,780 on sales. These are the numbers that we're seeing at the moment. We still don't have them exactly. So consolidated net profit is at 3436. I'm just reading them out to you, but we put out the exact numbers. So it's exactly in line, exactly what we thought is going to happen. 3436 is the consolidated net profit, and this is broadly what we expected. And the consolidated sales, that's the worry to look at. Consolidated sales number is not good at the moment. But we'll also have to look at the dollar revenue numbers. We just keep giving you these numbers at the bottom of your screen. What we're getting right now are slightly rounded off numbers. So once we get more details, we'll give them to you. Constant currency dollar revenue is coming in also. We'll give you that as well. 3436 and 3440. These are two numbers that we're getting. Perhaps the parent number is 3440. That's what we are going to stick with, 3440. So that's just marginally beating. I mean, you hardly can say this. 16,782 crore is definitely lower than what we expected. We expected a 2.9% improvement in margins, and that has actually been just 1.4% on sales. That's what we expected. Net margin is therefore has gone up pretty sharply, so perhaps we'll see an EBITDA margin improvement as well. Net margin, which was at about 20.2%, that has gone up sharply, obviously, because of what is up about 30 basis points. That's the movement. We're seeing dollar revenues, constant currency terms, has been a disappointment again. But it's about $45 million lower than what we expected. Our expectation was about 2546. That was the poll that we did. $2,500 million is broadly what Infosys is producing there. And the stock is down 3.8%. And obviously that's going to have an impact on the heavyweights as well. TCS opened low and then went down. And the Nifty has now gone down by about 25 points, 85.39. That's what they were waiting for, obviously, and that is what we are seeing at the moment. 3435 crores is what we expected, 3440. We'll get the EBIT number out in just a couple of minutes for you. What we're getting at the moment is that net profit 3440, 1678.2. In another 20 minutes, Mr. Vishal Sikka, CEO and MD, will be speaking and giving more details on what has happened there. But perhaps the TCS commentary gives you a sense of what would have happened. Perhaps, again, North America is the weak space. BFSI probably hasn't done as well because there was a recovery. It was the strong base that we saw last year and the previous quarters, and then now there's a drop there. We expected 2550 approximately million, and there you got 2500. So there's almost a 2% difference in what the constant currency numbers were going to be. So definitely TCS, a bit of a worry at this point. Infosys, the sales number exactly in the way in which TCS numbers were down. We're getting... so Trip Chowdhry is with us right now. I don't know whether you've been able to look at the numbers closely. Mr. Chowdhry, what are you getting on EBIT margin? Have you been able to calculate that?
No, I haven't done that, but I can tell you, we have to have a bigger perspective. I think if you look at the company, the macro conditions are very uncertain. And I don't think, as I've been talking on the channel for almost a year, like company stock doesn't have a secular growth story. It will be naturally, dead stock pretty much. It's a sideways moving stock.
All right. So you're saying that it doesn't have a secular growth story. What does that mean, that we are going to see some sort of a dip and then again move up because the entire environment is changing. Would that be fair to say?
Yes, yes, because if you can think about it, the macro conditions are uncertain, the company's execution is questionable, and also the products offering and the way the industry and technology shifts are happening, there's clearly a lot of work that needs to be done, not only by Infosys, but almost every IT services company. And they are very slow to reinvent themselves. And that's a huge problem for the whole Indian IT services market. The best is not here, the worst is not over.
The best is not here and the worst is not over. That's an interesting comment that you've made. Just take our viewers through again, those who've joined us right now, what you mean by that. First, the worst is not over. I think we appear to have lost Mr. Chowdhry at the moment. We're trying to... let me ask you again, Mr. Chowdhry, if you can hear me, that you said that the worst is not over and the best is not yet here. Could you just explain a little bit more, give a little bit more color as to what you mean by that? All right, we'll dial that again, that number again for you in just a couple of minutes. There is that bit of a... But we have Rahul Singh with us. Rahul, what do you make of this, the numbers that have come in from Infi right now?
Well, I haven't seen the numbers in detail, so I would reserve my comments, but the overall numbers seem to be in line or slightly lower than expectations. But as I said, I don't want to comment in detail on it because I haven't seen it in detail.
You don't want to comment in detail, but any chance of getting a kind of first off-the-cuff remark? We won't hold you to it, and neither will our viewers. But both TCS and Infosys, we appear to be seeing some sort of decline in revenues than what was expected. Revenues have disappointed. PAT has actually been an inline for Infosys, and PAT has been better than expected for TCS. How do you analyze that? First hand, of course, the more details we get from the management, it will be easier to look at that.
Yeah, I think it will depend on the commentary, and like I was saying a while back, that a lot will depend on the commentary because IT services is a sector which is directly exposed to what's happening worldwide in terms of either slowdown or impact on banks of Brexit and so on. So we'll have to just wait and see what the management says on the commentary, and that will decide beyond this knee-jerk reaction and of the numbers. I think it'll depend a lot, both upwards or downwards, on what the management says on some of these global issues, and the way it might impact decision making by their customers going forward.
All right, Pankaj has more details on the numbers. Pankaj.
Right, Anand, I was just looking at the calculations, and if I just look at the dollar revenue growth, which everybody tracks, so if we just look at that number, it has come in at 25.1, which is about 2.5% growth in terms of numbers. And this is much lower than the 4% number that we and the street were expecting. Now their guidance is for 11.5%. Considering Q1 is the strongest quarter with the strongest growth for the company, I believe that there will be a guidance cut. We are still awaiting the press release from guidance cut, and we have not put out one detail, which is the EBIT margin number. Now the EBIT that is coming here, that's profit before minority interest and share of net profits for associate, it's coming at 4,800 crores. So maybe there is an adjustment over there. Employee benefit expenses have increased quite a bit, so that's why we are just awaiting further details in terms of press release. So these are the two numbers that we are awaiting. Also, one should not forget that this time around, most of the companies are changing their accounting standards. They are changing their accounting standards as per law. So maybe, one-time impact of that on EBIT may have come in. So we'll just wait and watch that what is the exact change of that accounting and what essentially is the impact. However, for TCS, they were reporting in a similar standard. So I think it's not going to impact them. Trip Chowdhry is still with us. Trip, for a company like Infosys.
We have the constant currency revenue guidance on the BSE side. It's between 10.5 to 12. So they have lowered it, as you had said in the morning, Pankaj.
Right. They have lowered it, and I think it's about 10.5 to about 12%. So I think they've kept the upper guidance same. I'll just open my guidance sheet. So it was about 11.5 to 13.5, okay, which they have reduced to 10.5 to 12. That's the constant currency number that we are looking at. And I think that would be taken in as a disappointment. Overall, poor set of numbers, 7% decline on Infosys. Clearly, it's a sort of derating event. Next 10 minutes, we'll have the management talking. Probably there could be a one-time impact because of the accounting changes, but it will not be so big. But I think that's the next thing that one would eye out for. We are getting the guidance. It's coming at 10.5 to 12%. This is CC revenue that we are talking about. It's known as constant currency. And the numbers have come in close to a decline for guidance as well as the revenues.
Right. Trip Chowdhry is still with us at the moment. Mr. Chowdhry, guidance put down. You expected it, right?
I've been expecting it for many quarters, and I think, the worst is not over yet. Because there's so many uncertainties in the macro conditions, and somehow there's a big gap between what Infosys capabilities are and what the market is demanding. And somehow they are too slow to reinvent themselves. And not only that, their focus is very haphazard. They are trying to be a product company, but their DNA is a service company. They talk about artificial intelligence, but somehow they lack natural intelligence. So there's a lot of issues they have to overcome before investors become comfortable with the complete execution of Infosys. I think the stock goes sideways. I don't see any upside secular growth, at least for the next 2 years.
Right. So if anyone wants to buy it at any point, they can actually buy. They have a 2-year time to buy it and actually look at even a cheaper stock. That's what you would say.
I would say if the stock goes to $15, it's a buy, and it will go up to $18 sell. And this movement between $15 and $18 will continue for the next 2 years. So it's a range-bound stock, but it's not going to break the $18 top.
What makes you say, you've been tracking this company for years, we've been talking to you for years. What makes you believe that they don't really have a vision when it comes to going into the new space, whether it's digital, whether it's the entire world of blockchain? Why do you see that when you speak to the management?
See, I'll tell you a few things. It is very easy to execute in a greenfield space. That is, I'm talking 2000 to 2006.
Yeah.
Outsourcing, BPO were all new things, and Indian companies were gaining market share against the incumbents, which were US-based companies. Today, the market has reached to a zero-sum game. Some company has to win and some company has to lose. Okay. That's one problem. Secondly, the market is shrinking by at least 10%. In that situation, you cannot run the company by slogans. That is the biggest problem with the current CEO of Infosys.
So, could you repeat that? You cannot run it by?
By shouting slogans. Like they have so many slogans like a keto plan, this plan, that plan. You have to have a complete execution and a tactical plan. Let me give you one example. If Infosys is executing fast, there is so many low-hanging fruits they can capture. For example, HP Enterprise got acquired by CSC. Paro Systems has gone to a private equity. There's almost $3 billion up for grabs. But what is Infosys doing? They're still trying to figuring out what is their DNA, what they want to do, rather than go and execute and attack the contracts of the vendors who are pretty much going to disappear. But the problem is there is no persistence in the Indian IT services company. I would say the seats are B grade. I wouldn't give them an A grade at all. They are too slow and too lazy and living in the day before yesterday's world, rather than try to invent and create spaces. And that's the problem with almost every Indian IT services company.
So would you say that when it comes to digital, when it comes to cloud, when it comes to blockchain, all these new exciting things that are happening, all these smaller companies coming up with apps, which are, they have these apps, and if you're a bank, you could just buy that app and not really require any big company to come and do your servicing. Would you say that essentially is reducing the cost arbitrage which was there for these Indian IT companies? You
see, the problem is, including the question you have asked, not that I want to be putting it down, but that's a fundamental problem of the way we look at IT services companies. We are counting the beans. We are looking at like we are going to a vegetable marketplace and trying to shop for tomatoes, potatoes, rather to see what is the end fruit or end recipe you want to give to the customer. The problem here is blockchains and everything is a fact. The key important thing is there are two dimensions. Everything to do with technology integration is going to disappear. Everything to do with the domain expertise is where the value is.
Yeah.
They should be focused on the business domain acumen and try to solve bigger business problems that customers are facing, because solving a technology problem is not any Indian IT services cup of tea. Like blockchain, they're not going to do anything. They have to alleviate their problem-solving skills at least 10 levels ahead, above the technology.
Give us an example. Give our viewers an example, Mr. Chowdhry, for them to be able to understand it.
See, first of all, very simple. They are talking about artificial intelligence, right?
Yeah.
That means nothing. The question to ask is, the question that they should be thinking in terms is, ultimately, you want to make sure that your application self-discovers the customer, self-discovers the price points, and self-fulfills the order-to-cash pipeline. Basically, if you think about supply chain management, all Indian IT services companies are stuck in the year 1980. Supply chain is a linear phenomenon. But if you look at digital the way you're saying, supply chain is getting disrupted and totally smashed by a new concept called a loosely coupled ecosystems based on tightly coupled subsystems. That's the new way you have to think about supply chain. There's so much money to be made if you can understand that the supply chain paradigm has shifted by 180 degrees. Now, if you don't have that kind of acumen and insight, I'm afraid to just, it's pretty much obnoxious that these CEOs should be paid that much for not even having insight. They should be paid the minimum wage, basically $10.50 for the kind of job these guys are doing. What are they doing? They just, and think about it.
Who's winning since you're saying that the market size is dropping and now the game is of market share, who are they losing out to?
See, but that's another wrong way to think. That's a loser's way to think. The market is shrinking, and because they are not creating markets.
But let's say who is creating the market instead right now?
None. There are only two companies in the world right now who are creating markets and who will be massively successful. It's Tesla Motors and it's Amazon AWS. Rest all companies are living day before yesterday's world. And that's the reason you will see all these companies are either selling themselves or having massive layoffs in USA because they are failing to reinvent. The question to ask is, why cannot Infosys, TCS, Wipro be thinking the same way that they were thinking in 1980s? They were hunger. Market never existed. They created demand. They created the market. These guys, are being paid more than anybody else in terms of their compensation. What have they delivered? Falling revenues, falling stock prices or stagnant stock price, no innovation, no creativity, nothing whatsoever. What do you do for such? The bottom line is they don't know what business they are in. And do you think you want to reward these CEOs and CFOs for doodling the thumbs and warming up the chairs?
So why would you buy at $15? What you're saying essentially is that you should just sell these companies and forget about it. Put your money in Tesla and Amazon.
That because they are creating an industry. Think about it. Today, the world, we are heading a recession. The only companies who will be successful are the companies who have big, broad, and bold strategies. Not share buyback, dividends, sing a little bit here, dance a little bit there, make an excuse here,